great tax tips. And Owen is going to join us every Thursday around 8:12 or a little later than that. Okay, so I'm a little late this morning, but around that time. And Owen, this morning we want to talk about something that's really important, and that's using different items for tax purposes, including your car. And a lot of people talk about that. How are you?
I'm good, Dan. Freezing my butt off, but I'm good.
Isn't it one of those days where you go, you tell people it's really good. No, I mean it's really cold.
Well, I may be phoning you next week if it's this cold.
So we're doing a phone-in segment already? Well, it's going to warm up on the weekend. That's the good news. And actually, our community cruiser is going to be out at the Cam's Kids Foundation hockey tournament. So it'll be about +3 that day. But speaking of vehicles, that vehicle obviously is attached to our company here. However, for example, my vehicle, if I do some sales and things like that, and I'm looking for a tax write-off, just a general question, and I know it's a real big ballpark here, but how easy is it for me to set up my vehicle to use as a portion of a tax write-off?
Well, that's an excellent question, Dan. Thanks for asking. And thanks for having me back again this year. I'm really excited about doing these tax tips for everybody. So basically, some people are allowed to claim their car either because they own a business and use the car for that purpose, or at least some portion of the time. And other people work for a company that requires them to use their car for seeing clients, meetings, service calls, and so forth.
Now, how do you differentiate that? And the reason I ask is, again, we have a community cruiser, but I have my own vehicle. If that community cruiser may be available, but say I'm using my vehicle part-time for sales, how difficult is that to prove to the tax department that I'm using it for business purposes?
Well, the important thing about that is really tracking your mileage. So I encourage all my clients to keep a mileage log, and there's different ways you can do that. There's the old pen and paper way, which I actually still use myself, believe it or not. And then there's also apps, phone apps that you can use, and they'll track your mileage. You just have to have your GPS set on, and it'll track everything you do. You can assign it to either business or personal, and at the end of the year or the end of the month, whichever you like, you'll get a printout, and you'll be able to use it.
What is the burden of proof that I am using it for business?
Yeah, that's the nice thing about the CRA. The burden of proof is always on us. We are guilty until proven innocent.
So I can say, yeah, I'm using it for business. Okay, prove it. And so how do I prove it?
Well, I always ask my clients a few questions when I talk about the car. One is, do you use your car for business? Do you get a T2200? Do you keep a mileage log? And do you keep all your receipts? And the answers I usually get back are, yes, I use it for business. What's a T2200? No, I don't have a mileage log. And I have some of the receipts.
Right.
So the T2200 works if you're working for another company and your sales or service, or you need to use your car for that company. They say, okay, you got to go to this appointment, you got to go to that appointment. So you track your mileage, and they need to give you what's called a T2200 at the end of the year. And that's what allows you to deduct all those expenses associated with your car.
Now, the T2200, though, is not specific. So it's not saying on January 13th, I went from here to there. That's the burden of proof there is on you.
That's correct. The T2200 just gives you the right to claim those expenses.
Right. So you have to prove it. And again, a lot of it is in receipting. Now, say I fill up my gas tank and I do keep that receipt. Obviously, there's going to be some personal aspect of that gas usage. Do I just keep the entire receipt and include it, and then there's a percentage that comes off of that, or how does that work?
Yeah, so you've kind of touched on a few things, but one is it's a percent. There's different ways of doing it. One is a percentage of all your kilometers. So for instance, if you travel 20,000 kilometers in a year and you keep your mileage log and determine that you've traveled 12,000 kilometers of the year for business, then you get to write off 60%, 12,000 of the 20. You get to write off 60% of all your car expenses. So that's one way to do it. Another way you can do it is we can charge kilometers, a rate per kilometer. So it depends on your circumstances, and I treat every client individually and determine what works out best for them.
Now, some people may have accountants who round out or go, okay, well, let's generalize. Yeah, you're probably around there. Boom. They input it and whatever. 2 years later, you get audited. You need actual physical proof to say this is what I did to get that 60%?
That's correct. There's two things that you have to have. You have to have all your receipts from all your car expenses, insurance, car repairs, fuel, gas repair, or gas repairs. I said that.
Would CAA be included in that?
CAA would be a deductible expense, absolutely. Anything to do with your car, any expense associated with your car. So you need to have all of those. That's the first thing. And the second thing is you have to have the mileage log. And the mileage log is who, why, where, and when, and how many kilometers it took you to do it.
Right. So, and then you can sit down at an audit, prove it.
That's right.
And then it comes down. How often do people get audited, do you find?
Yeah, it's more and more and more. So we use the word audit. That's everybody's favorite hate word with the CRA. What they do is they conduct reviews, and they conduct them all the time. And I've noticed in the last couple of years, it's going up big time.
I had one 3 or 4 years ago.
It's going up all the time. And the real problem becomes when you can't prove what you've claimed. So if you've claimed all these automobile expenses for your business or for employment income, and you can't prove it, you can bet some money that they'll be back again next year.
Right. And checking on that. And also, could they be then imposing some fines?
What happens is if you don't, actually having a really bad example or good example, depending on how you look at it. If I have a client and unfortunately against my suggestion, they did not keep all the receipts and did not keep a mileage log, and they were reviewed by CRA, and CRA is now in possession of $8,000 more of my client's money. So that includes both the taxes that were deducted and in the initial tax preparation, as well as interest. So,
wow. Now, as far as, and we'll wrap it up, and we'll keep mentioning this on a weekly basis as we continue the tax tips, but you've got all that information, you've got those receipts, and you filed this year. You haven't been audited for this year's, but obviously there's a potential to be audited somewhere down the road. How long do I have to keep all that information?
6 years.
6 years. After that, then you're not expected to.
That's right.
Right.
And for people that aren't good at keeping track of their receipts and their expenses and stuff, you know, I'm constantly dealing with this with clients. And the best thing to do, the easiest thing to do, and make it easy on yourself, because it's not easy, you won't do it, is put some envelopes in your car, just put them in the console, put them in your glove box, whatever works for you. And every time you get a gas receipt, put it in the envelope. Every time you get a car repair, put it in the envelope. Just keep putting all your car expenses in the envelope, and you're in your car when you get the receipt. So you should be able to do that. When the envelope's full, write the dates on the front of it, what it's for, file it in a safe place, and then you're good to go.
You know how many plastic bags, those little baggies I've got of gas receipts and things like that?
They work too.
But again, I got audited, 3 or 4 years ago, and sure enough, I had all that information, which I'd forgotten about, sitting in a box, and pulled it out. And yes, it took a bit of time to put it together, but put it together. And after the audit, and they had 2 auditors sitting there. And I said, listen, I don't have any Swiss bank accounts in there. Whatever. And they said, well, this is one of the closest audits we've ever come. I think we're $3 out.
That's awesome, Dan.
And they said, congratulations. I said, I told you I don't have any Swiss bank. Do I look like I have a Swiss bank account? But what saved my butt was the fact that I had those pieces of paper to say, here's what I spent it on. And there was some discrepancy, and we'll get into this at another time, because at the time I was married, and my wife had a credit card, and then they'd pay that credit card off, so that money would come into the bank account and then go very quickly. So they thought I was getting another source of income somehow, because it was a shared bank account. And there's all kinds of twists and turns I'm sure that you can tell us about in the coming weeks.
Absolutely.
Back again next Tuesday, Thursday, I should say, weather permitting.
Thanks so much, Dan. Absolutely. I'll be here every week.
Yeah, we'll get you in here live. We'll make sure you get one.
I'll do my best.
Well, if Jen's here, we get coffee.
Yeah, actually, I have to be honest. I live in Uxbridge, so it's so nice that it's only 5 minutes away.
That's right. I know it's early, but we want to thank you again for the tax tips.
Thank you, Dan.
Back again next Thursday.
It's Hakeem Optical's big winter sale. All Hakeem